please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Good afternoon. Welcome to Midcap Radar. I'm Sumaira Abdi and with me is my colleague Ekta Batra. Hi Ekta, good afternoon. And looks like we're a little bit lucky for the market because as of now the frontline indices were moving back into the green. We'd seen a bit of green a little bit earlier on, but that got sold into. So let's see if there's some, okay, maybe I spoke too soon. Let's see if there's some more stability to this little bit of an up move that we're seeing in the market. We've seen some reversal in Asia as well. So I guess there's no harm in hoping.
Yes, absolutely. And Sumaira, you know, I think the market is also on tenterhooks with regards to the trade tariffs, which are expected to start getting initiated for both China as well as the US. So that's going to take place tomorrow. So I think the market is in pretty much wait and watch mode, and not to mention that the US markets were shut on account of the July 4th holiday. So overall, for the Bank Nifty, we're seeing follow-on buying from yesterday, but it continues to be about specific stocks. So something like a Titan, which is down around 5-odd%, Infosys, which is down around 5-odd% at this point, and Reliance Industries post the AGM is down around 1-odd% at this point. But a lot to discuss in the broader markets as well. So we're going to get going in terms of the top stories and then get going in terms of news. Volatile trade on the Lal Street. Key indices trade almost flat. Meanwhile, Infosys and RIL remain drags. Midcap index continues to underperform.
Chairman and MD of Reliance Industries, Mukesh Ambani, announces a bag full of surprises at the 41st AGM, launching JioPhone 2, an upgrade on the existing variant, and the highly awaited fixed-line broadband service, Jio Giga Fiber. Ambani also showcases a huge digital push for RIL with a thrust on e-commerce and retail, and also education, agriculture and healthcare.
Karnataka Chief Minister H.D. Kumaraswamy presents the Congress-JDS coalition government's maiden budget, waives off all defaulted crop loans of farmers up to 31st December 2017, also proposes to hike excise on liquor by 4%.
Titan takes a knock after the management says that jewelry sales growth in Q1 FY19 was muted due to weak demand and high base. Tata Motors too trades under pressure. Weak JLR sales in the US, coupled with a report that a hard Brexit could cost the company about £1.2 billion, weigh on the stock.
Finance Minister Piyush Goyal meeting with heads of banks is underway to discuss the NPA resolution structure under Project Sakshat. Okay, so those are the top stories that we're tracking this afternoon. We have Ashwani Gujral joining in to discuss what he's strategizing. Ashwani, hi, over to you. So what would you recommend for the Nifty? Absolutely flat at this point in time, but a lot of specific stocks declining. Titan, Infosys, Vedanta, Tata Motors, all of them, and Reliance.
See, the problem is that we are towards the higher end of the range. Now, Bank Nifty is showing some amount of strength, but is not able to build on. So if you entered in the morning yesterday, I think it's a good time to take money off, because while, you know, European markets are recovering, Asia is recovering, we're not seeing that sort of follow through here. Maybe we rallied too sharply yesterday. So expiry on the Bank Nifty could be higher, but I think after 400-500 point of gain, chances are, you know, a lot of it is done. So if people are sitting on money, at least take half of it off. As far as individual stocks are concerned, today techs have come down very sharply, and this sort of movement often happens, you know, when there is institutional sell-off. So Mindtree is a sell with a stop of 1010, target of 965. Vedanta is a sell with a stop of 226, target of 214. And Ultratech is a buy with a stop of 3800, target of 3950.
Okay, all right. So that's the view coming in. Ashwani, what about specific stocks within the broader markets? There are a lot which have declined today, you know, on account of, say, news, say the Hathaways of the world. So what kind of approach would you recommend on stocks such as those?
You know, Hathaway, it wasn't a multi-bagger anyway. So, you know, these sort of disruptive news flows will kill these stocks. So, chances are this is the next telecom which is now going to happen. So it's down to 20 bucks. It soon become a penny stock. And it's very clear that, once Reliance enters homes, it's basically going to take over everything, gas, cable, whatever else you have. So all of these plays of, distribution will be over.
All right, Ashwani, for now, thanks very much for joining in with your thoughts. Let's shift focus now to a CNBC TV 18 exclusive. Sources tell us that NHAI is likely to begin their second round of highway auctions in the third week of July. Ashpreet Sethi joins in with these exclusive details. Hi, Ashpreet. What all can we expect then in the third week?
Yes, absolutely. In fact, what we do pick up from sources is that there will be 2 rounds which will be held in July, September itself within this period. The second round, of course, will begin by the third week of July, end of July, where it will cover about 479 kilometers, which will be stretching across Orissa, West Bengal, Assam, Bihar. Now, remember, through the second and the third round, the NHAI is looking at raising about $2.5 billion US, and in fact 18 to 20 projects will be done. Remember, the first round was already quite a success. It was much above, in fact 50% above the price that NHAI was expecting. They got 9,681 crore from the first round. So they are looking at completing the whole process in 4 rounds by the end of this fiscal. Now it remains to be seen when will the 4th round be held, but do remember that the second and the third round was supposed to begin in the month of March. There's already a delay of 2-3 months. Have to wait and see whether by July end they will be able to go ahead with it at all or not. Back to you.
All right, Ashpreet, thanks very much for that. From roads then to pharma. Ekta, you've been tracking this story on Unichem Labs that they've hiked some of the prices of their drugs. What are these drugs? I read the names and...
It's one drug.
Okay.
It's a hypertension drug, and even I find it difficult to pronounce. So I'm just going to pronounce the brand name of it. It's Ziac generic. So Ziac is the brand name for the drug, and hence the generic version of it. What we understand is that Unichem has hiked prices of this particular drug by around 10 to 15%. There was a lot of buzz in the market, Sumaira, that they've taken, a significant price hike in this drug. Why is it important is because they have 55% market share in this particular anti-hypertension drug in the US. So that means that if in case you do have 55% market share in that particular drug and you do take a price hike within that drug, then obviously your profit margins which you make on it would be far greater than what they were before. It also indicates that maybe there has come a point in the market in the US where you can take price hikes. Yes, up to 10% has been the norm since all of the uproar with regards to drug prices have taken place since 2016. But if you push it beyond 10%, then that means that maybe, companies are having the ability to do so again. So that would be an important indication in terms of what's happening for the market as well. Remember that Pfizer also hiked prices for 100 products of theirs just a few days ago. It was up to 10% for most of the products, but cumulatively, this is the second price hike that they've taken in the market. So again, it's an indication of what is also happening in the US market at this point.
All right, that makes sense. But for now, let's take a very quick break, come back in a bit, and we'll talk about, the impact on all of these rural play stocks of the MSP hike that has taken place. Dhananjay Sinha of MK Global Financial Services will join in to talk about his top picks on the other side. Do stay tuned.
Welcome back. Well, the Modi government has decided to hike the MSP or minimum support price for 14 kharif crops. Dhananjay Sinha of MK Global joins in to discuss this and what the stocks impacted could be, as well as more stocks that he would be tracking. Dhananjay, hi, thanks very much for joining in this afternoon. So according to you, if you have to play this rural consumption theme post the MSP price hike, which are your top picks?
So the thing is, we believe that there has been a significant focus on the rural aspect of the economy, and there has been a certain distress as far as the farm sector is concerned. So the increase in MSP is an indication that the government is seriously talking about increasing disposable income or resurrecting the farm sector. And within this, we have been overweight on all the rural consumption themes, which includes staples, durables, auto sector, and also agri inputs as a whole. So there is a whole cluster of stocks and sector that we have been looking at. So within the consumers basket, I think two important stocks that we have been, or few important stocks that we've been talking about are HUL on the FMCG side. We have also been very positive on things such as Bajaj Electrical, which is essentially a durable play in the mid-cap and small-cap space. Also, we think that there will be good traction in the two-wheeler space, wherein we are seeing Hero Motors actually, translating in or delivering some double-digit growth in volume terms. So I think Hero Motors is another one that we've been talking about. And apart from that, the whole agri-equipment sector, which included, tractor manufacturers. So Escorts is something we identified, long time back at 160 rupees. I mean, that has gone up substantially. So we continue to like that stock. There is a sort of a positive momentum we are also seeing with Mahindra and Mahindra. So that's another stock in the rural play that we've been looking at. And of course, the agri input sector, wherein our picks are Dhanuka and insecticide.
Hi Dhananjay, good afternoon. The rural play seems like the safest bet, right, ahead of elections, state elections, general elections. But what is this optimism actually based on? I mean, because, the hike in MSP may be steep, but it still falls short of promise, right? So is there a hope that given the quantum of hike this time, that next time around the government may be a little bit more proactive?
So as you may have read in my note, so the average increase in the MSP for the Kharif season is around 15%, and within that 13% is for paddy, and you have a whole cluster of other items such as oil seeds, pulses, and coarse cereals and cotton as well. So this is an increase of average 15% on a weighted average basis. This is the highest since 2013. So it appears that the government is acting more robustly with respect to fulfill its promise of ensuring 50% margin over cost of cultivation. We believe that inclusive of all cost, it is still falling short, but nevertheless there is a direction that is happening in that side. The other thing that has to be understood is that not only apart from the MSP increase, I think the government has also been fairly active in procuring. So if you look at the food grain buffer with the FCI and procurement agency, that I think is currently standing at 73 million tons. That's the peak we saw in 2012 or 13. So we are going back up there. So quite apart from increase in MSP, there has been an increase in very aggressive increase in procurement that we have seen in recent months. So I think that will continue going forward. Apart from that, we think that there is a considerable momentum as far as government allocation in the rural sector. So if you look at year to date, in the first 2 months itself, there is a 30% increase in the rural under the rural ministry. So my sense is that on average, this year and last year would be somewhere around 20% or 17-odd%. We think that Narega allocation could be as high as 65,000 crores or 70,000 crores. So there is a whole host of lot of other interventions that the government is doing through rural programs, employment program, housing for all, power for all, lots of stuff that is being done. So I think this MSP increase is there to resurrect the farm sector, which had undergone a shock after the demonetization. So I think that part is also adding up together. So you have to really look at a comprehensive view.
Okay. Dhananjay, I just wanted your thoughts with regards to the RIL AGM which took place as well. There seems to be a big thrust in terms of fiber optics by RIL, and stocks such as Hathway are down and out today, as well as something like a Den, simply because of the fear that Reliance could probably become much more aggressive in that space. What's your sense in terms of what your key takeaways were and how you'd approach stocks such as those?
So I think, wherever Reliance has actually been, so I have really not really studied it in big detail, but I think, wherever Reliance has become fairly aggressive with respect to the telecom operation, I think that is something that has been inciting a lot of, intensifying a lot of competition. We have seen in the telecom space, it might actually be, also be reflecting in the other space as well. So I think that competition fear is basically playing out in the stocks that you mentioned.
All right, Dhananjay, for now, we'll leave it at that. Thanks very much for dropping in. So that's the word coming in from MK. Well, on the market, the news is that the frontline indices have once again slipped a tad. So they're back in the red. The Sensex is down about 50 odd points and the Midcap index down 0.5%. We'll take a quick break and we'll talk about one of the other big triggers of the day, which is the farm loan waiver, which has been announced by the Karnataka. Hi, welcome back. You're watching Midcap Radar. Nina's maiden budget. Karnataka Chief Minister H.D. Kumaraswamy has announced a 34,000 crore rupee farm loan waiver. Abhishek Kodari has the details on what this could mean in terms of stock impact. Abhishek.
Well, Sumera, as you mentioned, the farm loan waiver of 34,000 crore is for loans up to 2 lakh per farmer or per family that has taken a loan. And it also includes the farmers who have repaid or not repaid. I'll just go through that. The government is looking to repay all those farmers who have paid the amount or up to 25,000, whichever is less, to encourage, non-defaulting farmers also. And government officials of cooperative sectors and farmers who have paid for tax for 3 years are not eligible. Now, what this means is that this loan waiver is only for PSU banks and cooperative banks in the state of Karnataka, and the loan default ratio is typically on the higher side for agriculture loans, as we have seen one of the management saying on air that the loan default ratio is as high as 40%. So this is a credit positive as they get repayment from the state government, but this spoils the credit culture amongst the low-cost ticket customers and that who are in rural and semi-urban areas.
Okay, all right, Abhishek. Thanks very much for that. So 34,000 crores totally in terms of the loan waiver that's come through. But the Karnataka budget also increased the excise duty on Indian-made liquor by 4%. Sonal is standing by to tell us how this will impact liquor stocks.
Well, Ekta, it will not be much of an impact on the liquor stocks. If I just run you through the details, well, as you pointed out, 4% hike in excise duty is what we see for Indian-made liquor in Karnataka. Karnataka is an important market in terms of revenues for the liquor industry. For United Spirits alone, Maharashtra and Karnataka contribute close to 40% of their revenues. Also, it is one of the largest markets for beer industry in India. So on the whole, it's important in terms of revenues and market share for both United Breweries and United Spirits. However, I spoke to some industry experts. They told me that there was an expectation of a 10% hike of excise duty on Indian-made liquor. Also, so they don't think it will be much of an impact, and 4% is a relief that is coming through. Also, some analysts, they are saying that these companies will be able to pass on the price hikes. So overall, not much an impact on all these stocks. Back to you.
Sonal, thanks very much for that. In fact, let's bring you the opinion from one of the big rural plays, that's M&M. We caught up with Rajesh Jejurikar, the president of the farm equipment sector at M&M, and he remains optimistic on the overall growth for the industry and plans to grow market share to about 50%.
We have $100 billion of non-tractor global business opportunity. So really the driver to our strategy is when there is such a big upside available, we have to think beyond being just a domestic tractor player. Because we have so much headroom for growth. We find that in many parts of the world, our products are perfectly suitable because the climatic conditions or the soil conditions are very similar to what we have here in India. So really we have an opportunity to leverage that, and that's the driver of our global strategy. So harvesters, of course, is expensive, but there's a lot of farm equipment and tractor implements which are not so expensive. If you look at India right now, about less than 20% of the total business is from non-tractors. If you look at it global, it's almost reversed. So just 30-odd% is tractors, the rest is mechanization or other farm machinery. So over a period of time, we think India is going to keep adding newer mechanization solutions going beyond tractors. we believe it's our role as a leader to enable that to happen. We think that we have all the right parameters to enable growth in market share. One key new strategy which we've spoken about recently is the three-brand strategy, which is the introduction of our third brand. So we have a Mahindra brand, we have a Swaraj brand, and we're now using our joint venture we have with Gujarat government, which was earlier called Mahindra Gujarat Tractor, now renamed Gromax. We've launched last year a third brand called Trackstar.
Yeah, Trackstar.
And that's going to be, taking on the price-sensitive consumer opportunity.
Okay, and on that note, we're going to wrap up this edition of Midcap Radar. Your stocks once we're back. Stay tuned.